Good afternoon, ladies and gentlemen. My name is Brian Ellis. On behalf of the Axiom Workforce Fund team, I'd like to welcome you today. During the next 20 to 30 minutes, we're going to take a close look at one of the most unique, exciting, and deeply, deeply appealing multifamily syndication deals that I've ever seen. This is a good one. It's one that I'm excited about sharing with you. The syndication is called the Axiom Workforce Fund, or Axiom for short, and just to whet your appetite, quickly consider these three facts, if you will. First of all, in a mere 6 weeks, savvy individual investors like yourself have reviewed the Axiom opportunity, and in that short time, they've already invested a total of $6.39 million. Understand that's an inflow rate of over $1 million per week, the kind of numbers that only happens when the deal is so obviously and intensely desirable that it just sells itself. Now, fact number two, Axiom's general partners and management team have themselves invested a total of nearly $1 million of their own money into this deal because they believe in this deal and they have put their money where their mouth is. And fact number three, investors already involved in the Axiom Workforce Fund are showing their confidence in the most convincing way possible. They're doing it with their wallets. What do I mean? Well, substantially more than average, fully 1/3 of the investors in this fund, people just like you who have already partnered with us, did so by investing substantially more than the baseline requirement of $100,000. Such is their belief in this opportunity. Now, hold those facts in the back of your mind and consider this. If you're in the market for an investment opportunity that combines very strong cash flow, exceptional and truly substantial year one tax benefits, and assets squarely located in one of the most desirable real estate markets in the whole of the United States, not to mention a management team offering a collective 4 decades of strong, consistent, historically verified results for affluent investors like yourself, then I suspect you're going to be overwhelmingly intrigued by what you learn in the next 20 to 30 minutes as I share with you just how special the Axiom Workforce Fund is as an opportunity for well-qualified individual investors, maybe like yourself. In fact, here's a quick note of highly relevant trivia for you. After collecting over $1 million per week on average, there's only firm availability for about another $1.3 million worth of Class A1 shares until they're no longer available. And momentarily, I'll tell you why you definitely want to own A1 shares in the Axiom Fund. But make no mistake, this is not just another multifamily investment opportunity, and I'll demonstrate that to you quite conclusively. In fact, imagine if you could, just imagine if you could make an investment, the year one tax benefits of which alone, just tax benefits, that's enough to handily trounce the long-term average of the S&P 500. Think about that. And that's before you consider cash flow, equity, any other tangible benefits of the deal, of which there are many. Most multifamily investments, as efficient as they can be tax-wise, for example, they don't offer the tax benefits anywhere approaching that scale. And that's just one of the ways that you're going to experience something with Axiom that puts it in a class all its own. Now, as I mentioned to you, my name is Brian Ellis, and I'm here just as a guide to introduce you to the Axiom Workforce Fund. You can find my work published in Forbes and in TheStreet.com and Entrepreneur and soon on Motley Fool as well, along with many others. And I also teach law, tax law specifically, through the University of California. And I'm a regular featured speaker at investment strategy conferences all over the world. Now, frankly, I am not a member of the management team at Axiom. They hired me to make sure that they were able to very capably communicate the potential of the Axiom Workforce Fund. And in working with them, I've actually found the opportunity so compelling that I offered to help make the case on their behalf. And a strong case it is. So now let's take a look at the broad strokes of this opportunity right after I share this quick legal notice with you. I'm not licensed as an attorney, accountant, CPA, nor do I hold any other professional licenses and am not providing information to you on such a basis. I believe that the details of what I share with you today are correct, but I do not warrant either their correctness or completeness. It's your responsibility to make independent decisions without regard to anything I say during this presentation. Seek your own licensed counsel who is qualified to make recommendations based on your situation. Finally, I'm making this presentation because I think the investment is an extraordinary opportunity, but not because I receive payment for your investment, because your investment decisions have no financial impact on me in any way. But I hope for your sake, you'll take this very seriously because it's a great opportunity. Okay, now that we made the lawyers happy, let's move on. So just to make sure that we're all on the same page, I'm going to take the next 90 seconds or so, quickly go over why savvy investors broadly agree that the asset class of multifamily real estate is objectively superior to other asset classes, whether your point of reference is stocks or single-family houses or oil and gas or anything else. And then we get to the good stuff, the Axiom Workforce Fund, and exactly why new and experienced investors alike are finding it so natural to deploy their capital with Axiom as a distinctly superior alternative to other multifamily deals. Then we'll wrap up with a word about qualifications to participate. This is a wonderful opportunity, to be clear, but it is not right for everybody. We don't seek to maximize the number of partners with whom we work. We seek to maximize the quality. And so when it becomes clear to you that Axiom is a good fit for you, I'll extend a special invitation to you to learn more. And if appropriate, I'll invite you to participate with us before our funding deadline that's almost upon us right now. So very briefly, why multifamily investing? Look, as a concept, it's basically impossible to argue that multifamily is anything but an extraordinary asset class. It's the everything asset class because even ordinary multifamily investments routinely produce everything you want as an investor, like equity appreciation, like cash flow, and like solid tax benefits. That's not to mention the potential to use leverage in the form of debt financing, which means that every dollar invested can go much, much farther. There's a reason that once people taste the potential of real estate, and particularly multifamily real estate, then stocks, mutual funds, and all the volatility of Wall Street quickly loses its luster. All of that describes what happens even with ordinary, non-exceptional multifamily deals. Unfortunately, that's just what most multifamily opportunities are today. Ordinary, not exceptional, ho-hum, just another syndication like so many bounced around among pretend real estate moguls and amateur investment clubs. But that, my friends, does not describe the Axiom Workforce Fund. Axiom is different in such important ways. Something like a solid golden needle in a haystack. Here's a story so you can decide for yourself. So Merrill Kaliser, a highly respected Dallas-based securities attorney, has a special advantage over just about everybody. When people have great deals, they reach out to him. That's what securities attorneys do. They help with investment opportunities and help people who want to implement them access the capital that they need to fund their deals. So Merrill has literally dozens of deals crossing his firm's desk every single month. And that's not to mention his own personal experience, having purchased over 9,500 single-family rental properties. Yes, I said 9,500 different single-family rental properties over the last 7 years on behalf of some of the biggest buyers in the country. And, oh yeah, his firm has also closed over $3 billion in multifamily syndications over the last 6 years. And now he's an incredibly in-demand securities lawyer focused largely on real estate deals. Point is, this guy knows his stuff and is positioned strategically to experience a level of deal flow that the rest of us can really only dream of. But the harsh truth is that most of what crosses his desk are the typical run-of-the-mill multifamily syndication deals we've all seen a million times. It's almost as if these deals match some sort of cookie-cutter formula that the sponsor learned at a real estate seminar. You know the type. You're probably being pitched on those deals by other sponsors right now, as a matter of fact. There's just nothing exciting or inspiring about that sort of thing. So how's this for a backstory? Imagine you're in Merrill's shoes. Someone reaches out to you with news of an apartment complex that's for sale in an incredibly desirable market. The complex is called Park Lane. And after even just a quick review, Merrill instantly sees that unlike run-of-the-mill multifamily deals, Park Lane is different. This one is special. This one is worth taking seriously. But why? Well, 3 reasons. Reason number 1 is Park Lane is already already netting over $250,000 a year from its 110 units without doing anything to it at all. You can't do much better than strong profit from day number one, but it gets better, leading to reason number two, which is huge optimization potential. Despite its profitability, Park Lane is incredibly poorly run right now by a mom and pop team who are good people. And they've taken great care of the property and kept it reasonably well occupied. But other than that, not much. And Merrill instantly sees that that's just the type of undermanagement which makes savvy multifamily investors drool with delight because of the opportunities for really easily optimizing the income of the transaction. But even that is not the truly huge opportunity. That is reason number three. Competition elimination. Remember, Park Lane is right here. See that? Immediately adjacent to Park Lane is another complex called Lambie. Lambie is in almost every way a mirror image of Park Lane. Good condition, strong net positive rents, good occupancy, even similar capacity. Park Lane has 110 units, Lambie has 108. But also like Park Lane, Lambie is collecting fundamentally below market rental rates because of serious competition in the area from, you guessed it, Park Lane. For years, the owners of these two complexes have been in a race to the bottom to see who could charge less than the other in order to attract the most tenants. And do you know who wins in that scenario? Well, investors in the Axiom Workforce Fund do. Because as of September 27th, that's barely 3 weeks ago, thanks to the tireless efforts of Merrill's partners, Bhuvan and Pratima Sharma, both of those complexes are now the property of Axiom. I'll tell you more about the Sharmas and their astounding level of experience as multifamily investors and syndicators in just a moment, but here's what you must understand that it means for Axiom to own both Park Lane and Lambie. It means two really big things. First, it means that all at once, the primary competitor for each of those units doesn't exist anymore. Now, all roads lead to Axiom at 51st, which is the name of the combined unit that has both Park Lane and Lambie involved. This is where reduced competitive pressures automatically push rents higher in the near term. You absolutely must check out Axiom's pro forma. You'll see why it's conservative to expect a pop in annual net operating income of about $300,000 over the next 3 to 5 years alone. And remember, a share of that money is what you, as an investor in Axiom Workforce Fund, will receive. And it's already at about $250,000 a year. Think about that. That's what you share in. And that leads to the second thing that comes from Axiom's ownership and uniting of those properties into one high-quality asset, which is dramatically increased property value, increased equity. So you doubtlessly know that when the cash flow of an asset goes up, the value of that asset goes up as well. That's how valuations for cash flow properties is done. And using the most conservative evaluation models, when the net operating income goes up by over $300,000 or so per year, the real value of that property goes up by nearly $4 million in the same short 3 to 5 year time frame. Look, that's amazing. These are big, massive results in short periods of time based on completely logical and reasonable expectations and understandings of the market. And there's plenty more to tell you about this new combined apartment complex, appropriately called Axiom at 51st. There are additional monetization strategies. There are additional cost elimination techniques. And truly, each detail makes this project more attractive than the last. And frankly, one of the most attractive features is the market where these properties are located. Now, according to Forbes magazine, this market where this property is located has an unemployment rate of only 2.9%. That's amazing. This market's cost of living is well below the average nationally, making it a very desirable destination for even more residents. And get this, among the 35,000 cities in America, Forbes ranks this market number 55 among those 35,000 for among best places, best small cities for business and career. Self-Directed Investor Magazine has even more specific praise about this market, saying that it continues to grow, making it a sound environment for multifamily investment in particular, as the population increases and the pool of desirable recession-resistant jobs expands. So, what market is it? Well, it's none other than Amarillo, Texas, a market where since 1890, and I said that correctly, 1890, there has been one and only 1 year of population decline, way back in 1970. And even then, the drop was a mere 0.82%. Other than that, since 1890, 129 years ago when they began keeping those records, there's been nothing but steady or growing population growth. You just can't ask for better long-term prospects than that. Of course, Bhuvan and Pratima Sharma, Merrill's number-crunching, details-obsessed multifamily investing superstar partners, well, they were aware of the raw and incredibly attractive nature of Amarillo. These people know their stuff, and they know it incredibly well. They've done over $80 million worth of multifamily deals themselves. They've actually paid out over $6 million to their investors. They've paid out over $6 million to their investors. Think about that. And as either general or limited partners in other syndications, they own over 5,300 units right now with no end in sight. Suffice it to say, these people are presently where many of us dream of ending up as investors. And Bhuvan and Pratima are absolutely the center of Axiom's execution strategy. And when they and Merrill looked at Park Lane and Lambie, the fundamentals were and are simply so strong that the only choice was to say yes. But they didn't do that until after they had collectively spent literally hundreds of hours researching this deal, visiting the properties, confirming the data, and making sure there were no ugly surprises waiting for them. I can tell you from my experience with Bhuvan and Pratima that among many other reasons one might admire them, one of the best is that they are meticulous. Every I is dotted, every T is crossed, nothing gets missed. That's why, God forbid, should anything unfortunate happen either to Merrill or to the Sharmas, Axiom Workforce Fund could and would continue onward successfully because either could take over for the other. Such is the outstanding talent and experience of this team. And here again, everything about Axiom Workforce Fund is very special. Most of the time when you hear a presentation about a syndication, they spend all their time telling you about the grand and glorious deals that they plan to take down and just how great they think things will be if only you'll invest with them so they can pull off the deal. It's all hope and not a lot of substance. Well, how's this for substance? Axiom Workforce Fund already owns Park Lane. Axiom already owns Lambie. Capital has already been collected. Debt has been secured and is in place. Everything I've described to you so far is done. It's not theory anymore. It's done. In fact, those properties, as I said, have been united under one name. No more single complex with 110 units and another one with 108. There's now a 218-unit complex named Axiom at 51st, an apartment community that our investors can be very proud of, and an apartment complex where Axiom's investors are instantly receiving the benefit of substantially reduced costs, because both buildings are now under one management, not two. That, my friends, is a big deal. And when Bhuvan and Pratima Sharma are involved in managing an apartment community, they take the word community very seriously. For example, the Sharmas work with the YMCA and other organizations to provide valuable after-school activities to the children who are residents in their properties to raise community cohesion and keep residents staying longer and paying happily. And they work with local community leaders to provide free, yes, free back-to-school supplies for any children in the community who need them at the start of each new year. They care for the health of their residents by providing educational training on healthy living and by working with local medical providers and hospitals to offer crucial healthcare screenings to their community members. And when it's appropriate, the Sharmas even arrange for English as a second language classes for residents to break down the communication barriers. Frankly, that's really only a short list of what Bhuvan and Pratima Sharma do for the units that they control. But why do they do all this? Well, there's certainly a sense of social responsibility for sure. There's no doubt about that. We should all aspire to doing good while we do well for ourselves. But the benefit is more than just social. And here's the black and white truth of the matter. Look, the Sharmas own over 5,300 units. I suspect they'd be doing all of those things regardless of how it affected the bottom line, because that's the kind of people they are. But here's the additional reality that's so good for all of us. The Sharmas know what works. They know what keeps residents in place for the long term and motivates them to pay happily and on time each month. That's why they do what they do. It makes good social sense, sure, but it just makes good business sense, because just about all of the expense of these efforts are borne by the local community leaders with whom the Sharmas partner to provide the services. It's a win-win-win. And the win for Axiom is having happier tenants who stay longer and who pay more reliably. That is the real tangible benefit to a clear social good. And remember, what I've described to you so far is not merely what the Axiom team is hoping to accomplish. It's what's already been done. It's what Axiom's current investor partners, who have been investing at a rate of over $1 million of new capital into the fund per week, this is what they're enjoying at this very moment. And as great as that is, I've got to tell you, we honestly haven't even made it to the best part yet. And that best part is why, for just a few more days, Axiom is holding open the opportunity to jump into the Axiom Workforce Fund right now, because of the next extraordinary opportunity in their sights. And frankly, this one is, well, let's just look at it right now so you can see for yourself how extraordinary it is and how it fits so perfectly into Axiom's exit strategy, which is itself also quite different from and objectively superior to the narrower visioned Me Too multifamily deals that I and you and all of us are constantly pitched. This third asset that Axiom will take down in a closing barely 2 weeks from now is called Morton Place. And where Lambie and Park Lane are great assets, everything about Morton proves it's nothing short of stunning. Morton is a 168-unit building also located in Amarillo. And like both Park Lane and Lambie, Morton is cash flowing beautifully as of right now, yielding a whopping annual net income of $594,980. And that's before Merrill and the Sharmas do anything at all to optimize the asset and raise the income. Morton is a similar story to Park Lane and Lambie in other ways too. It's in a high traffic area on a main road, which is wonderful. But despite its profitability, it's being managed in a very amateurish manner by a mom and pop team who are doing the best they know to do, but they just don't have the benefit of having owned over 5,300 units like the Sharmas, or having been involved in literally over $3 billion in real estate transactions like Merrill. Because, for them, cash flow's been good enough. So literally right now, literally 80% of the units are in need of upgrade. And this is a beautiful thing. This is a major value add opportunity. Major. In fact, after investing a total of $9.4 million into Morton for purchase, value-added upgrades, and income optimization, Axiom projects net income to leap upwards, projects the valuation to leap upwards to well over $13 million, $13,051,000, an increase of over $3.65 million. That amounts to a return on capital of 101.2% over 3 to 5 years. Just astounding. Just astounding. And let's keep our eye on the ball here, folks. Those numbers, that's what you get. That's how you benefit as an investor in the Axiom Workforce Fund. You get a share of that. And you get to enjoy not just the equity appreciation, but also the cash flow. And you get paid out on that each and every quarter like clockwork without lifting a finger. Oh, and there's one more thing you should know about Morton. And this is so good, it's almost unbelievable. So I'll just show it to you so you can see it with your own eyes. This is a site view of Morton Place, obviously. And here are the buildings. this is where the 168 units producing all of the income that I just mentioned to you, this is where those units are housed. Now, right here are some roads, major roads that go through the area with extremely strong vehicle traffic already in place, providing plenty of automatic advertising in the direction of Morton Place. But back here, see that? See that? Those buildings? Those don't look like apartments, do they? Well, they're not. Those buildings, my friends, are the bonus part of this deal that takes an already great deal and makes it something several levels beyond merely great. Because those buildings containing 116 self-storage units, well, those buildings are an extra special bonus. And I'm confident you already know that the self-storage asset class is one of the hottest and absolutely most desirable asset classes, bar none. But there's more good news about this. Three things, actually. First, you know how much more Axiom is paying to get those storage units along with Morton Place? I'll give you one guess with a hint, and the number rhymes with hero. Yeah, that's right. It's just part of this deal. It doesn't increase the acquisition cost by a single penny, which leads to the second bit of additional good news, which is that on day number one, without any effort whatsoever, those storage facilities are currently netting an additional $58,000 per year on top of the rental revenue from Morton that I showed you before. It's almost like a huge gimme that drops nearly 60 grand a year into our collective pockets with no additional expense. But that just scratches the surface, because the third bit of great news about these storage facilities is that they're making that much money despite being largely unused. You see, the mom and pop owners of Morton they've been pretty happy with the cash flow that Morton's been producing for them. So despite the fact that it would be easy and cheap to advertise their storage facility because it's located directly on a very high traffic road, they've done no advertising whatsoever. And still, those units are bringing in $58,000 per year after all expenses. And investors involved in the Axiom Workforce Fund get that for free because of the skillful negotiation by Merrill and the Axiom team. Oh, and I forgot to mention, Axiom has extremely solid data that you can find in the pro forma that indicates that net income from the storage facility alone will better than double in the next 3 to 5 years to, very conservatively, $125,000 plus per year, just by treating the asset with respect and bringing in more awareness through advertising. Now, again, all of the details in the pro forma are included in the PPM, and for qualified accredited investors, that's something you should take a look at right away, because as I mentioned a few minutes ago, Axiom only really has to raise about another $1.3 million to fund all of this. And at the current inflow rate of $1 million plus per week, that'll take another, 1.3 weeks, 10 days or so? And while the minimum capital quality for your participation in Axiom Workforce Fund is only $100,000, the fact is that our average unaffiliated investor in this fund has invested an average of $225,000. So at that rate, we'll only need likely 5 or 6 more investors. And we had, there were well over 120 people registered for today's call alone. So I fear for you that this opportunity may be short. So I'll tell you how to get involved in just a moment. There's actually another reason, by the way, that you're going to want to get involved in Axiom Workforce Fund right away. And that is, you'll literally get a higher share of the profits than if you do this later, because of the clever way that Merrill has built in some front-loaded benefits for early stage investors. More on that in just a moment. Now, I know I've said it so many times already, but it just continues to be true. I honestly don't think you've even heard the really great news yet about the raw potential represented by the Axiom Workforce Fund team. And in truth, there's far more good news than I'm even going to be able to share with you today, because we're just about done now. But should you be fortunate enough to participate in that remaining $1.3 million of capital opportunity, there are 3 additional huge benefits you need to understand. Benefits that really separate Axiom from the vast universe of lesser syndications, and I'll share those with you very quickly. First, you're going to get return multiplying tax benefits. Look, I'm not going to bore you with tax minutia, but what I will say is this. Obviously, you've got to confirm it with your own tax counsel, but many of you will be able to realize an actual real dollar savings on the income taxes you pay for this year, for 2019, that's equal to about 20% of your investment into the Axiom Workforce Funds. That's right. Here's what that means. In effect, an investment of $100,000 effectively only requires about 80 grand because you'll get the other $20,000 back from the government. A whole lot of you will be able to get that full 20% benefit in year number 1 because of a tax strategy called cost segregation, which Axiom will be happy to tell you more about when you meet them. But even if your tax situation does not allow you to get that full 20% tax benefit or $20,000 on a $100,000 investment in this year's tax return, you will be able to use that to eliminate the first $20,000 or so worth of taxes that you'd otherwise have paid on the money you earn from the Axiom Workforce Fund. And remember, this is like a dollar for dollar reduction in the amount of tax you pay, not a mere deduction against income, but a real reduction in your tax bill. And most syndicators don't do this because they can't do this. In effect, it's like getting up to a 20% return on your investment in year 1, and that's before you factor in the cash flow, before you factor in the equity buildup that we've already discussed, before any other advantage, 20% right off the bat. Then the second of the 3 big benefits you get, and that is if you're fortunate enough to be involved in the final $1.3 million or so of capital Axiom that they'll accept in the next few days. That benefit is that you get to participate in the fund through a superior class of ownership. Now, remember, one of the big advantages for Axiom is that Merrill himself is a securities attorney. He's very good at it. And he did something very clever with this offering. He's broken up the syndication into a couple different classes of ownership, specifically with the purpose of rewarding early investors, people who get in now. Class A1, which you'll receive if you qualify to invest in Axiom during the next $1.3 million or so of capital collection. Well, that entitles you to some astoundingly favorable terms. What are those terms? Well, Class A1 owners receive a 90-10 split of all profit in your favor, of course. So you get 90% of the profit, made even better by a 7% preferred annual return. Think about that. You really need to have a look at the full private placement memorandum for details, of course, but to me, as an experienced investor, and I've been doing this a long time, when I see the words preferred return, what I know is that the profit gets paid to me first. And I love deals that give me the profit first as a preferred return. That's exactly what Axiom does. Now, Axiom has plans to continue growing and acquiring more assets and raising more capital in the future to match with the beautiful exit plan options they've devised, which I'll tell you about shortly. But after the deadline for participation in Class A1 shares, and that deadline is roughly 2 to 3 weeks from now, or even sooner when we've fully funded the small remaining capital requirement, then the only option thereafter for investing will be Class A2 shares. Those will be very good shares too, very desirable, and I have nothing but the utmost confidence that it will be just as easy for Axiom to raise money under Class 2 or A2 as under Class A1. But here's why you want to get into the A1 shares now. Remember, the profit split for folks who have A1 shares is 90-10. You get 90% of the profit. But for Class A2, the profit split is only 80-20. In other words, just by being among the founding members of Axiom Workforce Fund, you get a contractually committed higher percentage of profit than those who join up at a later date. This fund and its skilled management team make so much sense that you should be involved no matter what. And that being the case, it only makes sense for savvy qualified investors to do so now when the results will be much better automatically than if they waited until later to invest when Class A1 shares are no longer available. And then the third and final of the big 3 benefits I'm sharing with you right now, annual independent third-party audits. Might not sound all that exciting, but it is for people like me and you who are investors. Let me tell you why. Here's what it means. Every year, an independent auditing firm, a well-respected firm in Dallas called Saville, will perform an independent audit of Axiom's books. Axiom investor partners will, such as yourself, if you get involved, you will, of course, have access to that audit. You've got to understand, by the way, that Merrill's early experience as a lawyer was in the bankruptcy world, where he saw all kinds of terrible corruption and mismanagement, and that left a mark on him, which means he will do whatever it takes to avoid even the appearance of questionable custodianship over your capital. It just won't be allowed. And he's fully committed to providing full transparency as a matter of policy by giving Axiom's investors, like you, access to the full audit information. And there's one other reason that Merrill wants to have those audits done every year. It has to do with his exit plans, which frankly, virtually no other multifamily fund has a prayer of duplicating. So the Axiom model works like this. Axiom will begin with the three assets I mentioned to you, Park Lane and Lambie, which are combined into Axiom at 51st, and Morton Place with the associated storage facility. Now, using the implementation skills of another member of the Axiom team, Jeff Satz, who is a Lean Six Sigma black belt, you people in business know what that means. That is a big deal. That basically means this guy gets stuff done. Well, using his skills, value will be added to those assets. He will apply the strategies and the plans that we've discussed. He will oversee incomes being raised and values being increased substantially, as we've already discussed. But that's just a start. Axiom will continue to seek out other exceptional multifamily assets and will welcome more investor partners in the future to fund those transactions, just as Warren Buffett continues to acquire new assets and to invite in new investors to his company, Berkshire Hathaway, to this very day. And this is where Axiom diverges from the standard in a huge, recognizable, and powerful way. While Axiom retains discretion to make the best decisions for its exit strategy based on market conditions, Axiom has bigger goals in mind than most others. You see, one of the most lucrative exits possible is by way selling out to a real estate investment trust, or REIT for short. And if you're not familiar, a REIT is just a special type of investment fund that places serious limits on the freedom of the fund managers to invest the capital. They basically have to buy just cash flow producing real estate, but in exchange, REITs are very tax efficient. So here's the Axiom connection. One of those limits on REITs is that they love to buy cash flowing multifamily properties, and there's nothing but ample evidence of this. But part of the legal limits they face is a rather severe restriction on investing in renovations and upgrades and such. It's not impossible for them, but it is a huge pain in the neck for them to take any chances, because they can't afford to lose the tax benefits conferred to their investors by being a REIT. So what they love to do is to buy already renovated, well-managed, and cash flow producing assets that are basically ready to go as is. But because REITs are frequently publicly traded on Wall Street, well, it's simply not worth their time, not worth their effort to look at every little 100 or 200 or even 500 unit apartment that comes on the market. And that, by the way, is why other smaller syndications that hold only one asset will likely never even have the option of participating in exit by selling out to a REIT, even though that's one of the most desirable and profitable forms of exit. But for Axiom, that will be an option, because not only has Axiom already acquired two great assets in Park Lane and Lambie, and not only are they about to close on the purchase of an astoundingly attractive third asset in the form of Morton Place, but Axiom will continue to seek out and acquire high quality assets to further build the wealth and capital base for their investors. And with each new asset, Axiom will become more and more attractive and therefore more and more valuable to REITs and other suitors. And since Merrill has closed over $3 billion worth of syndications and has extensive experience working directly with REITs and other major real estate industry titans in the last 15 years, he is uniquely positioned and incredibly well qualified to guide Axiom towards the very best exit possible, whether that's selling off assets individually or selling out the entire fund to a REIT or other major player. That's an option that single asset funds just don't have. It's crazy. In working with Merrill and the team at Axiom Workforce Fund, I've seen very, very closely how astoundingly attractive this deal is. I mean, this is a great one, folks. Strong cash flow day number one, astoundingly strong tax benefits in year number one, a management team that's second to none, including, by the way, Mr. Gunnar Teltow, Axiom's resident expert in institutional capital and investor relations. As an Axiom Workforce Fund investor partner, it will be Gunnar who makes sure you always know everything you want and everything you need to know about your investment and its performance. And to that end, Gunnar will provide you with access to Axiom's information management portal provided through Opus Fund Services, Axiom's third-party hedge fund administrator, who is described, by the way, as the best North American hedge fund administrator by HedgeWeek, a highly respected publication in the alternative investment industry. Therein, you'll have regularly updated information about your money and will never be left wondering. In fact, that news, you're going to get this information in another way as well. You're going to get a monthly update, a monthly newsletter, and a weekly newsletter whenever it turns out that Axiom has taken down a new deal and needs to give you a more frequent update because there's more details to share. They're reactive. They make sure you know what you need to know when you need to know it. Gunnar is a pro. You're going to get to know him, and you're going to really like him. Look, there are more details you'll doubtlessly want to know, and I've actually received a number of great questions that I'll address momentarily. But before we go any farther, let's go ahead and look at how you can take the next step towards getting involved. First is the issue of qualifications and suitability. This fund is only available to accredited investors. If you don't know whether you're an accredited investor, don't worry. That's easy enough to figure out when you speak with the folks at Axiom for the first time. So don't let that hold you back for now. Second is capital requirements. The baseline capital quality that Axiom accepts is $100,000 per investor. Though in certain cases, they will accept more if you are a particularly desirable investor partner. And given the superiority of Class A1 shares over the A2 shares that will be available later, there's been a lot of interest among Axiom's current investors in deploying capital beyond the baseline. So when you reach out to Axiom momentarily, please do bring up your interest in investments beyond the baseline to see if your capital can be accommodated under Class A1. That's really what you want. You need to ask them that specifically. Now, I'll tell you in just a moment how to respond to get in the queue for this opportunity before all $1.3 million in capital allocation is filled. But first, why don't we do this so I can let the folks at Axiom know about the interest in this and prepare accordingly. You probably see on your screen there's a window placed there by the GoToWebinar software, and there's a part of it there that is called questions. Questions, and therein you can type in a question and send it to me. Why don't you go ahead and do that? Type in the word interested if you are interested in learning a little bit more about the Axiom Workforce Fund. Again, go over into the questions area. Yeah, thank you so much. See your responses already. Go over into the questions area and put in the word interested if you are interested in knowing more about the Axiom Workforce Fund. Steve, Jonathan, Edward, Joseph, Ron, a lot more of you. Roxy, Jana, thank you. A lot more of you are entering your names as well. So I didn't say everybody's name. So if I didn't say yours, don't be insulted. It's just a lot of you are responding because this deal makes sense. Now, I'm going to tell you now how to learn more. Simply go, and honestly, I'd go right now if I was you, to be honest. Go to this webpage, axiomworkforce.com/schedule.html. axiomworkforce.com/schedule.html. Do that right now. The URL is at the bottom of your screen. Go over there to that URL, and when you do, it'll look like this, kind of like the page you see in front of you. All you need to do is select anyone in this box right here, you don't request Merrill or anyone specifically, because if you do, that'll limit your chances of speaking to someone right away. Just select the option anyone and select a date here and a time here, and then be sure to enter your name, email, and phone number here. Oops, down there towards the bottom. It looks like I didn't highlight that. My apologies. And then this is optional, but I strongly recommend it. There in the notes field in the lower right, please indicate how much capital that you are thinking of deploying to Axiom Workforce Funds. Of course, subject to confirming that it's a great fit for you with a phone call, of course. There's no obligation in that. It will be useful and beneficial for you to do so. Trust me. And then just click the button at the bottom of the page that says book in order to set up an appointment. Now, again, my respectful recommendation to you is this. Go to that page right now. There are a whole lot of people who have responded interested, and I think you folks might find this one interesting. David, I won't say your last name, David, just for your privacy. But David is clearly an existing investor, and he said interested to invest more than our original investment. So thank you, David, and all of you. There are a whole lot more of you whose names I didn't say. Thank you for all of your responses. But my recommendation to you is to go. I've got a lot of the questions that have come in from you. I'm going to answer those here in just a second. But go right now to axiomworkforce.com/schedule.html. Now, again, just based on the number of people that sent in notice that they're interested in this opportunity, I really think you ought to go over there and do that right now as soon as possible. Because remember, here's the thing. Axiom only has an absolute need for about another 1.3 million or so. And I frankly suspect it won't take more than 5 or 6 new investors to fill that need, and I think we'll have it today, frankly. Maybe early next week, but probably today. Now, when you speak to the Axiom team, they're going to help make sure you understand the conceptual fundamentals. And if you're a good financial fit, then I'm sure they'll offer to send you the private placement memorandum for your review. Now, remember, folks, I am an outsider. I do not have a stake in Axiom Workforce Fund, and that's so that I can speak to you objectively about it. I don't make a penny. I don't make a single penny, whether all of you invest today or none of you do. But if I may be so bold, I'm going to tell you something the only way I know how to say it. Folks, this one makes sense. This one makes a whole lot of sense. And so in the interest of securing your spot in the Class A1 shares, the most desirable class of shares, which are available only until November or until Axiom's first round capital needs are filled, whichever happens first, then what you should do is go right now to axiomworkforce.com/schedule.html. Set up an appointment time for today if possible, or Monday if not, and be ready to review the PPM and make a decision as promptly as is prudent. Now, I've had a number of questions come in that we've just prepared slides for. I'm going to try to answer these for you very quickly. There are a whole lot of you on the line, and a whole lot of you have very kindly expressed interest in sending some questions. So what is your minimum investment amount? We've seen a couple of times. Well, our baseline capital quality is $100,000. But for some particularly desirable investor partners, we will accept more. And that has actually been more typical than not lately. And a lot of our investors have requested to deploy more than the minimum. So that is an option that's available. It's something that we'll have to discuss with you, but that is what's on the table right now. Now, how much experience does management have in the Axiom Workforce Fund? Well, this is one of the most beautiful advantages of Axiom, frankly. You have Merrill Kaliser, a securities attorney, no less, with bankruptcy experience, no less, two things that are deeply valuable in ways that you can't possibly know unless you've run a syndication before. You've got him at the helm. And by the way, he's also bought 9,500 separate single-family residences on rental properties, specifically on behalf of some of the biggest buyers in the country. And his firm has closed over $3 billion in real estate transactions, real estate syndications, and other syndications. Merrill's big league. but he's not where it ends. There's also Bhuvan and Pratima Sharma, who, among their list of accolades, I think the most interesting one is that they, as general partner or limited partner, own or have an interest in over 5,300 different units. Those are just some of the people at the helm. There are a number of other really great people involved, but those are the headline folks for now. The amount of experience on this team is breathtaking. There's no other proper description. So what's the exit plan is another question I've seen a number of times, and that's a great question. This fund, the Axiom Workforce Fund, is set up so that it has and will have ownership of multiple assets, not just one. This is not a single purpose entity. The reason for that is because Merrill wants to and is reserving for Axiom an option that is not available for the vast majority of syndications out there. And that option is to build Axiom to such a size that it is an interesting, valuable, and desirable target for acquisition by a REIT. You can talk about it with whoever you speak to at Axiom whenever you reach out at axiomworkforce.com/schedule.html. But here's what you need to know. Acquisition by a REIT is one of the most desirable, profitable ways to exit a syndication like the Axiom Workforce Fund. That is an option that Merrill has engineered into the structure of this fund, but that doesn't engineer away the ability to sell off individual assets at any time that the market tells him is the right time to do it. So there's, in this structure, in having multiple entities in this structure, that has added flexibility for Merrill and the Axiom Workforce team. It has added flexibility. It's a beautiful, powerful thing. Another question is, what return is guaranteed to me? Well, that's a good question. The answer is, let me be very clear with you. There is no such thing as a guaranteed return anywhere except for by governments who can print their own money. How about that? Now, we have solid expectations for results here based on multiple decades of collective experience among the management team and lots of research and just good hard data that shows what we expect and why we believe it. But there is no specific guarantee, and there won't be. And if somebody offers you a guaranteed return, you really need to think hard about whether you want to do business with somebody who makes that sort of an offer that is actually impossible. But what is offered is a beautiful split of the profits in the form of 90% to you and 10% to the management team. And oh, by the way, you also get a 7% included in that, a 7% preferred return. Again, that means you get paid first. You get paid first. I love that as an investor. I love seeing the words preferred return. You get that with the Axiom Workforce Fund. And by the way, you really should go right now to axiomworkforce.com/schedule.html. And when you do that, fill out that form, select the drop-down box that says anybody for the person to talk to. You really don't want to select a particular person so that you're able to talk to someone as soon as possible. And then select the time and enter your name and telephone number and email. And a member of the team at Axiom will reach out to you. And I really do recommend that you choose today and this afternoon to speak to them if it's a possibility, if not as soon as possible, because as I mentioned previously, the capital inflow average for this fund has been well over $1 million a week. There was another $300,000 that came in just this morning. Forgive me, it was either 200 or 300,000, but there was a big chunk of money that came in again just this morning. So this capital inflow rate is probably accelerating, not slowing down. So, and by the way, this is a good answer to the question of can I invest in Axiom in the future? The answer is yes. You do not have to do this today or anytime soon if you don't want. You really don't. There's no pressure. We want you to make the right decision for you. If you make the choice to get involved in Axiom Workforce Fund right away, soon enough that you are able to participate in the Class A1 shares, that means that you get that 90-10 split. If you don't do it soon enough to get A1 shares, that means you're going to have to settle for the 80-20 split, which means you're going to be making less money on the same investments just because you waited. So if you have the option to not wait, there's no time like the present, my friends. Another question, how can I get answers to questions about Axiom? And that is an excellent question. The answer to that is, of course, to go to axiomworkforce.com/schedule.html. It's that link you see on the bottom of your screen there. Go there right now. You don't even have to type in your question in the notes field. You can if you want, but probably what would be better is just to have set a time to have one of the Axiom team members call you back. They'll do that, and that's the best way to get all your questions answered. This one came up, and this must have been from someone who joined us late. This question is, how much money has management invested in the fund? This is clearly a very insightful and experienced investor. That's one of the things I always want to know too when I'm pitched on a syndication or an investment. The question is, management or leadership team, if you believe in this so much, how much money have you put into it? Well, folks, in this case, there is hard evidence that this management team believes in this thing and is voting with their wallet, because the management team has invested nearly $1 million all by themselves. Of the $6 million or so raised, about $1 million of it comes from management. That is astounding. That is a beautiful indicator that they're willing to put their money where their mouth is. If they are, I think it's reasonable for me and you to consider it as well. Next, isn't it unusual to have more than one asset in a syndication? That's a great question. And the answer is, well, yeah, maybe it is. Maybe it is. So what? The reason that single asset syndications have become so popular is because they're simpler. They're easier. They're more accessible to people who have less experience doing syndications. Well, here's the thing, my friends. Merrill Kaliser does not lack experience. Bhuvan Sharma does not lack experience. Pratima Sharma does not lack experience. It is not a relevant consideration for them to do things that are necessary for people who lack experience. They're using a structure that allows them a lot more flexibility and the ability to build a really substantial asset, substantial enough that it will be worthy of acquisition by a REIT in the future. That's the idea here. So is it unusual? Somewhat. Is it brilliant? You bet. Now, how much money are you trying to raise, and how much have you raised? Well, we've already raised, I say we, I'm identifying with them already because I love this deal, but I'm actually not associated with Axiom Workforce. I'm impressed as hell by this. This is the kind of deal that frustrates a person like me who can't invest because of the need to stay objective. Dear Lord, this is a good one. Now, how much money are you trying to raise? How much have you raised? I said we. They have raised a bit over $6 million at this point. And the absolute requirement from here is $1.3 million additional. So there's just not a lot left that we need to raise, right? May I meet the management team? The answer is absolutely, positively. And some more of you have put in some great questions. I'll get to those in just a second here. May I meet the management team? The answer is absolutely. That would be a great idea. I am absolutely certain that if you enter an appointment request there at axiomworkforce.com/schedule.html, that the team member that you speak with will be happy to schedule a time for you to come in to Merrill's office, meet the team, to meet Merrill, to meet Bhuvan, and to meet everybody on the team, Pratima and everyone. This is a great idea. You should absolutely do it. The only thing that I would recommend to you, just as a practical matter, is just move quickly, because there's limited openings for additional capital at the Class A1 level. Right now, folks, this is the kind of opportunity that frankly is easy to sell because it sells itself, but it's it sells itself because this kind of thing doesn't come along very often. We're done now. There are a couple more questions that you guys have entered. I'm going to answer those. I don't have a slide for them yet. Edward asks, is the meeting the only way to review this PPM? Edward, you are welcome to send in a note by that same page, and let them know what your questions are, and the team at Axiom will be happy to help you out. And he's also asking if he can get the PPM before the meeting. And Edward, why don't you, whenever you go to axiomworkforce.com/schedule.html, I think that's a very insightful question you just asked. Why don't you ask them to send you the PPM? I don't know what their policy is. They may be willing to do that before talking to you. They may not, but I think it'd be a good idea to just go ahead and ask, because it's not an unreasonable question. Jonathan asks, what class real estate is it, A, B, or C? Jonathan, I always hesitate to categorize real estate like that. From the outside looking in, I would say it's probably headed towards the C plus B minus range, but you really need to clarify that with the Axiom Workforce rep that you speak with, and just make sure that that my evaluation matches theirs. I think it's probably fairly accurate, but just confirm with them when you speak to them. Now, folks, we're all done. I do want to encourage you to understand that we are short on available space in terms of capital, and we're very short on time, regardless of what else happens. And it's roughly 2 to 3 weeks from now, Class A1 shares are no longer available. But I suspect that they won't be available long before then, just because as soon as Axiom has collected all the capital they need, then the A1 shares will stop being available at that point, even if it's less than 2 or 3 weeks away. Don't decide to do something that's imprudent, but think about it and be careful. But don't be one of those investors who thinks that taking time is the definition of care. That's not the case. Taking care is the definition of care. You need to do that expeditiously, because I really would love to see you have the opportunity to get involved in an opportunity of this magnitude. You will. Everything in me says that 5 or 10 years from now, you're going to look back at this moment and be very glad it happened. So with that, ladies and gentlemen, thank you for your time. My name is Brian Ellis. On behalf of Merrill Kaliser, the Sharmas, all of the management team at Axiom Workforce Fund, thank you for being here today. Have a great rest of the afternoon, and please do reach out right now at axiomworkforce.com/schedule.html. Have a great day, everybody.